How much is workers' compensation insurance? The cost depends on the state where your employees work, and the kind of work they do. Most of the time, the cost for coverage is based on a rate for a certain kind of work applied to each $100 of payroll. Thus the rate for a clerical office worker will be much lower than the rate for a roofer. But the cost for some types of employment, such as domestic workers, is based on the number of such employees, regardless of how much they are paid. Examples are, in servants, the cleaning lady, and outservants, grounds attendant. You pay, per person, not on the amount you pay them. While some states are the only market for coverage, others allow private insurers to offer policies. But most all look to the NCCI, National Council of Compensation Insurance, for research on rates, or else to simply adopt the rates published by NCCI. Larger employees are also experience rated, which applies a factor to the basic rates, to adjust the cost based on claims. Thus an experience factor of 82 equates to an 18% discount, whereas a 108 factor means you pay 8% more than the standard rates. Larger employees may also have the advantage of a dividend plan, in which they receive an actual payment from the insurance company to recognize their good loss experience. At policy inception, premium is based on an estimates of payrolls over the year ahead. After renewal, the insurance company audits the books of the employer to see what the actual numbers were. The employer is billed an additional amount, or is refunded a sum, to balance the estimate to the actual. A common but absolutely erroneous idea held by some employers is that their employees may be paid as independent contractors. As such, they are not employees, and therefore no workers' compensation coverage is required of them. The problem here is that the application of workers' compensation is not based on how workers are paid, but rather on the statutory definition of an employee, for purposes of work comp. Generally, the definition is very similar to this. The controlling test of employment is not how the worker is paid, but rather the existence of a master-servant relationship, in which the master has the right to control and direct the employees in the performance of their work and the manner in which the work is to be done. It is not the exercise of this right which is important, but rather the master's possession of such right. Because workers' comp benefits will be paid to the worker whether or not a policy is in effect, failing to provide the coverage means the employer will not only be charged with the cost of care and loss wages, but also will be fined for failure to carry insurance, and that any defenses offered on account of employee or third-party actions will be abrogated, thrown out. In addition, in some jurisdictions, jail time is a possibility. Most of the time, the workers' compensation insurance coverage value relies on a rate for a specific reasonable work applied to every $100 of payroll. Thus the speed for a clerical office worker is much below the speed for a roofer. But the value for a few sorts of employment, like domestic workers, relies on the number of such employees, irrespective of what proportion they're paid. Examples are the cleaning lady and grounds attendant. You pay, per person, not on the number you pay them. What state are you in? Rates can vary between states looking at several factors. Some states are monopolistic, meaning that there's only one source of coverage. What quite a company is you running? What's your experience within the industry, and what do your covered employees do? Many carriers only write coverage surely categories of business, and your employees must be classified correctly supported their general job duties. What is their annual payroll? Important, since the speed could be a direct factor of payroll volume times the bottom rate for that employee's job classification. For instance, a clerical office worker will have a far lower rate of interest than, say, a manufacturing engineer. To give you an inspiration of the breadth and depth of the market, compare these recent rates for a few of my clients in CA. 2 employees janitorial service $8,000 per year, 3 employees restaurant $2,500 per year, 250 employees film studio $245,000 per year, 1 employee doctor's office $500 per year. Workers' compensation insurance is likely to be an insurance policy obtained by a company to cover the medical costs and lost wages for its employees' work-related injuries and illnesses. In the U.S., each state determines the worker comp insurance that companies must provide. The cost of the workers' compensation insurance is paid by the employer. Many view the cost as another fringe benefit and will include the cost in its fringe benefit rate. Hence, the cost of workers' compensation insurance for production workers will be an additional product cost. The cost of workers' compensation insurance for the office staff will be a period cost and will be expensed immediately as part of SG&A. The cost of workers' compensation insurance varies by the type of work performed, each employee's annual pay, and the company's experience rating. In other words, the cost of workers' compensation insurance will be highest when the work performed is dangerous, the employees in those jobs have high annual pay, and the company has a history of many injuries. On the other hand, the workers' compensation insurance cost will be very low for an office clerk who never enters the factory area. As an employer, you go to your insurance agent, the same agent that sold you the rest of your commercial insurance, and add workers' compensation. If you don't already have an agent, you should look for an independent insurance agent, one representing multiple insurance companies, and specializes in commercial insurance as opposed to personal insurance. You will need an estimate of what each employee will do and what their annual salary will be. Note, outside of the high-risk pool, the rates are all identical as the state establishes the workers' comp rates for each class of employee. In the high-risk pool, those rates get surcharged, because no one else will write it. Sometimes when you don't have prior insurance, your first year or two, you end up in the high-risk pool.